Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Ink Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Ted, are you going to win the award for last year?
We'll have to see. It was a tough year though for mid-cap Canadian stocks because what happened with inflation expectations and the Fed having to reverse course. It was a tough year. So I'm kind of thinking that maybe 2020 might be a better year for Canadian mid-cap stocks, but a lot will depend on the news flow and how the Fed reacts to all this data we have coming our way and whether they keep pumping that balance sheet full of liquidity and securities, Jim, and handing the market more and more cash like they've been doing for the last few months. If they keep doing that, I think it'll be a pretty good year for Canadian equities.
Ted, the Supreme Court of Canada has rejected BC's appeal to stop the Trans Mountain Pipeline. BC contending it can control what kind of products flow in a federally controlled pipeline. The court rejecting that argument. So does this mean the roadblocks to the Trans Mountain at least have all been removed, or can we expect more?
Well, I think any of the serious roadblocks have been removed. We have the political will to get the project done. The courts, to use the courts now to stop it, it would really, I think, be a big long shot. Look, you never say never, but yes, I think it's very good news for the Canadian oil patch. It's, I think it was expected. I would have been surprised if the ruling had gone the other way, but it's good news, and hopefully it will help firm up sentiment towards Canadian oil and gas stocks, which continue to suffer from this notion that everything in Canada is lousy and can't get anything done, and we don't have any export markets, and so it's a good development, but it would have been, I guess, the damage would have been greater had it gone the other way. I mean, I think market participants were probably expecting this decision. Had it gone the other way, though, that would have been a real shocker.
Is there any concern with oil rigs and oil workers fleeing from Alberta's poor market right now to Texas that when oil in Canada picks up again, we might have a shortage of talent and equipment?
I think it's always a concern about the Canadian labor market losing talent to other jurisdictions in the United States. Ironically, I think with the situation with Trump and, just how things have evolved in the U.S. over the past few years, kind of help Canada a little bit, retain talent, or at least replace it, from other countries that are coming here, and our visa structure is a little bit more open. So, but yes, we have to be concerned about that, and I'm hoping that the Conservative Party leadership race will really get its head around how to make Canada more competitive. And I'm not saying that from a partisan perspective. I just think it would be good for Canada if the Conservative Party leadership race actually focused on some real policy challenges for Canada, not getting bogged down in one or two emotional issues. So we'll have to see, but yeah, hopefully the conservative leadership candidates will start coming up with some new ideas on how to make sure that those people, for example, in the Alberta oil patch, stay here even during the tough times, so we have them when things pick up.
Peter MacKay throwing his hat into the ring, but he did that during the election campaign when he already was openly criticizing Andrew Scheer, and then after the election said Scheer's campaign was like having a breakaway on an open net and missing with your slap shot.
Right. Well, I'll be looking forward to hearing what Peter has to say about how he would invigorate the Canadian economy. And as I'm going to be, listening to all of them, and hopefully we'll hear some new stuff, Jim. We need some new ideas, and we know what we're going to get from the current government in Ottawa. And it's kind of this sort of pandering to the so-called middle class. That's kind of a moving target, but politicians love to pander, and we will see the where the conservative leaders focus their affections. Certainly to win the conservative leadership, they'll have to certainly pander to a certain anti-climate action crowd, and there's a certain group that they're going to have to contend with, but the one that leaves enough wiggle room to broaden that party's base and narrative beyond just the sort of anti-climate change news, discussions that a lot of people, not everyone in the Conservative Party, but certainly a lot of people in the Conservative Party want to hear. I mean, that's all fine and dandy, but it doesn't win you a government. So they're going to have to broaden or change the narrative so that voters start thinking about how will the Conservative Party make Canada a stronger country compared to Justin Trudeau. It's a tough one because Justin Trudeau is a fantastic communicator, and he does have an ability to connect with people. So the Conservatives are going to have to choose a leader who has something different to offer Canadians, something relevant, and is a good communicator. So it's they've got a tough. The Conservative Party members have a very important and tough job ahead to pick the right leader for the times.
I think the people of Alberta and Saskatchewan who solidly rejected the Liberals, but it's all about the economy, stupid, as Bill Clinton would say. And I think if the Conservatives want to push outside of those places, it is the economy. We know Canada's in a very soft position with the downturn in real estate and the role it plays. I mean, how important is real estate in keeping the economy going in Canada? And when it goes down, does it take the economy with it?
I mean, the way I would frame it for any Conservative Party leader is, look, we need a strong real estate sector, but that should be driven by a strong economy, not the other way round.
Exactly.
It's a strong economy, that should be driving up real estate prices, and you don't want to be relying on another tower being built as your main economic engine. You want towers to be built because you got people who've got money and want to upgrade, or new students are getting jobs and buying condos. I mean, that's a healthy type of housing market. You don't want it as a speculative casino where people are buying multiple units on hoping they can flip it. I mean, so I hope that's how I hope the Conservatives really do focus on the economy with some innovative ideas. And look, the climate change issue, they're going to have to get creative on how they're going to both ease the concerns of their base that this isn't going to be just a huge tax grab, but they've also got to be able to go to Canadians with a realistic plan on how they're going to tackle it, and if there's one or two candidates who are, don't believe that we should be doing anything on climate change, well, that's fine. Just make your case, and the Conservative Party the members will have to assess whether that person can bring the country with them. I think it's a tall order, but if they want to have that debate, let's have it. But one has to remember, if you're a Conservative Party member, that that leader then has to go to the Canadian public and make that case as well. So, I think there's a lot of great things you could do in the oil patch. We talked about this on our one of our last shows in 2019. There are ways to harness the innovation that's taking place right here in Canada, right in Alberta, right in Saskatchewan. Use the innovation around carbon capture technologies and make Canada a world leader in that, so that we can hit our Paris targets as having the oil patch as part of the solution, not seen as the problem.
We'll have more with Ted Dixon right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, Phase 1, China-U.S. trade deal approved on Wednesday. What was in it? What does it mean? And will there just be future phases 2, 3, 4, 16, 29?
I mean, this was, the way I view it, is primarily a political deal to move trade now off the agenda for Donald Trump in the election. And what I mean by that, move the contentious part of the trade war. Now, he has a piece of paper now that he can campaign on that has commitments from China. Well, now, whether they follow through their commitments or not is a completely different story. But Donald Trump now has something he can take on the campaign trail on the trade front. He has also got the Canada, U.S., Mexico, I believe it's Canada, Mexico, U.S. agreement, they've ratified. So, he's got what he needs. Donald Trump has what he needs to run his campaign in the fall. How this plays out in the markets, Jim, the important thing is that it takes away a certain amount of uncertainty that was holding the market back. And the other interesting part is that no tariffs get removed, so we're not going to have any deflation from this trade deal. And in fact, inflation is a key theme that we're looking at in 2020, not trade, thank goodness. We talked at the beginning of the show, some of the challenges around 2019, and trade was very much one of them in terms of how it was impacting the Canadian market, just that uncertainty. Well, we've taken that off now the table, fortunately, for 2020. But inflation is now starting, I think, to slowly work its way onto the radar screens of investors. And what we've seen, and we've written about this, you can take a look at our newsletter that we put on the Canadian Insider site under Insights. Basically, we've seen a nice stealth move up of commodities over the last 90 days. But, as the bond market snoozes, we're not really doing anything. Commodities are slowly moving higher. And it's being led by sugar, which is, one of those staples that, if it gets some momentum, it can feed through and be a bit of a commodity leader. It's been hitting new 52-week highs. It hasn't got a lot of attention yet, and I don't think it will get much attention in the broad market until, we start seeing things like oil move. And right now we're in January. It's typically a very weak period for oil. Sometimes it'll set the low for the year in January, but oil's behaving okay. It hasn't collapsed after the truce in the Middle East. Between the U.S. and Iran. It's kind of hung in here. So it's very interesting that crude is kind of behaving okay. Now, could that change next week? Sure, it could change. But, we're keeping a close eye on it. We've seen a lot of insider buying in the oil patch late last year. The amounts that we're seeing suggests that August was the low for oil and gas stocks in Canada, that this current pullback here, the seasonally weak period, for those who missed the oil move in the last part of 2019, it may provide an opportunity to get back in. So take a look at our newsletter. It's called As the Bottom Market Snoozes, Commodity Prices Are Flying on Canadian Insider. And, you'll get a sense of where we're coming from on why that's an important theme to watch. Canadian stocks, Canadian mid-cap stocks, as I mentioned earlier, very highly correlated with inflation. And, Jim, there was a retail sales report in the U.S. that got the market excited today because it, basically came in as expected, and some elements of it were a little bit more. It came in a little bit higher than expected, but it was an interesting comment I read from Adam Button over at Forex Live, which I follow, and his first take on it was, you look at where a lot of the gains came from. It was from like food and beverages, in personal care and gasoline stations. So those are very kind of inflation sensitive areas, and so this move up in retail sales in the U.S. could very well just be sort of a move up in inflation. So keep an eye on that. It's going to have big implications. If the inflation does keep to move up, it's going to be a great year for Canadian stocks, and it should be a lousy year for the bond market and for those hot, those hot dividend yielding plays, those defensive dividend yielding plays that been so popular. It could be a very challenging year for them. So we could have quite a different year in 2020 than we had in 2019. But inflation for us is the key to watch. And what you want to watch initially is inflation expectations, because these inflation numbers only come out once a month. But if you can look at what the break-even yields are in the U.S. bond markets, 10 years and the like. You can track that. Well, we've put a few charts on our site. You can also track it through Fred, which is the St. Louis Federal Reserve Bank. They have a lot of data on their site. So keep an eye on what the break-even yields are doing. If they move up here, the Canadian stocks is where you want to be, and this rally you're seeing in U.S. tech is actually, probably a selling opportunity. So it all depends on inflation. If inflation rolls over and fades away in the bond market, yields stay where they are, well, then tech's going to do fantastic. It'll continue to be the hot play. But if you see a breakout in the bond yields, I think crude oil will have a lot to do with it. So keep an eye on that, especially as we head into February, as we move through this challenging period in crude oil. Crude oil starts to move higher, then you're going to see probably bond yields move higher, and that'll change the dynamic in global equities significantly.
We'll have more with Ted Dixon right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, are interest rates as low as they can go in North America, or could they slip even further?
Well, of course, again, anything is possible, and trying to make a prediction on the interest rates is almost impossible. And when you get beyond what the Fed and the Bank of Canada are going to do, the long bond market is manipulated by central banks, particularly in Europe and in Japan, who are continuing to buy those instruments. So you've got manipulation. So could they go lower? Well, I don't know. If the ECB all of a sudden found that they could buy even more bonds, last time I checked, they were worried about running out of, German government bonds that they could buy because, they have to buy all these different country bonds in a proportion. So, I don't see the case very strongly for lower rates. And in Canada, we've gone out on a limb here and said, no, the Bank of Canada is not going to cut rates in the first half of 2020, and there's two reasons for that. We talked about inflation. It's at the bank's target. So unless they can come out and say, well, here's the reason why we think inflation is going to fall, they better have a pretty compelling case. But Bolos is retiring in mid-year, so he's not going to do anything. He's going to leave it up to his successor to make any moves. Unless there's a crisis. Unless there's something really dramatic. So, all these calls at the Bank of Canada is going to be cutting rates off of a couple of data points here and there. I think that's book talking. I just think the reality is that the Bank of Canada and the current leadership of the Bank of Canada has very limited scope to do anything. I think they won't. I think they'll be doing a lot of speaking. I think they'll be doing a lot of talking, but they won't be doing a lot of action.
Ted, thank you so much for chatting with us.
Thanks for having me back.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.